This is light work. Come on, spill the tea. Yeah. Ooh.
Hey y'all.
What's good?
I'm Laura.
And I'm Dee. And welcome to
Spill the Tea with Laura and Dee. What's our topic today?
I'm glad you asked. Our Candid Convo for today is red flags to watch out for when purchasing in the Atlanta real estate market.
Got it very well. So when you are purchasing in any market, I think knowing the market is probably understanding the market you're buying in is the most important. Like that's definitely the most important part in purchasing. So red flags when purchasing, I guess it's kind of dependent on what your purpose is, right? So if you're purchasing to flip it, one of the things you're going to want to watch out for is an oversaturated market.
Right.
So Decatur is definitely turning into an oversaturated market right now in the Atlanta market. It's an area that lots of flippers are getting in. You can get houses at fairly inexpensive prices, but then when you're done, you need to make sure you don't look like everything else in the market. And that's what's going on in the Decatur market right now, is we're seeing that inventory tick up over 4 months.
Right.
So when you're looking at over 4 months worth of inventory, that's where it starts to shift from a seller's market more to a neutral market. And you're not going to be able to get the house sold for top dollar anymore. You're going to have to start coming down, or you're going to have, if you're flipping, you're going to have some kind of something special, right? That's where your feature walls, your staging, you're taking it up a notch, kind of will help you get the property sold.
Right. And I feel like an oversaturated market, if you're trying to buy as like a consumer, just trying to move into the neighborhood, it's like, well, on one hand, there are a lot of options, but I feel like whenever I see a lot of houses in a specific, like for instance, in a specific neighborhood, my first question is, what's going on with the neighborhood?
Right. Why? And a lot of times, you know, that's us as humans, right? What's wrong with it? A lot of times it's nothing. It's the oversaturation in the market. And so I think that, you know, if you're looking to flip, that's something that you really want to look for. Now, something else, if you're looking to flip, that I would say is kind of the opposite end of that spectrum, is being the person that sets the price point. Right. So I have a listing that we just went under contract with in Johns Creek, and his house, he renovated it with the intention to live there. Right. It was not an investment property. So he improved the property, which made us have to set the price. So if you're looking from a flipping standpoint as well, another red flag is no other investors are in the area. If you're the first person in that area, you're going to set that price. So don't ever shoot like to the moon on that first couple flips in the area if you're going to try to get in there and be one of the first or the first if you're flipping.
Right. That's actually a good segue into our next, another like red flag is how long properties are sitting on market, right? Because if you're setting the price, I feel like there's an expectation of it's going to be a minute.
Right.
Especially depending on the price that you're trying to set. Like if you're trying to if you're trying to raise the bar, then at that point it's going to be sitting out there.
We have to make the buyers understand why you're raising the bar, right? This neighborhood was X, 300,000 for the last 2 years.
Right.
Why do you want 415 for your house? Like, why is it so much better? And so a lot of times you kind of have to take that and chunk that out, right? And so watching and knowing what's around you is really, really, really important. Days on market, again, you want to follow what is the market doing, right? So my seller that we just listed in, we're under contract for a great price, 98% of list price. He's super happy. He's shocked we even got what we got. He's like, you're going to list for what? I'm like, yeah, we're going to list for that. And we got 98% of list price. We have no repairs from the inspection. The home was in immaculate condition. But days on market is something else we talked about. And so if days on market is 55 in your neighborhood, but days on market in the market you're selling in, right? Come out of your micro-focused neighborhood and get into a little bit bigger area, go from a neighborhood to a city, that days on market in that city may be 60. Right? So understanding and knowing what the days on market and what that expectation is will help you price that house correctly and know when it is time to take a shift and make a move. And so if you're looking to list a property, know if the days on market is 6 months, is 3 months. Because if you don't, then you're going to start wiggling and you're going to want to start moving because you're going to want it to be 2021, and it's just not anymore.
Right.
And so the data is what's going to drive how you move.
Right. Right. And that's actually really good to know, like, before you dive into anything, just because it's like, to your point, it's if you don't look finite enough, you're not really going to know what the days on market
Right.
are for that specific neighborhood, right? And you may be looking
Right.
at the overall, like, zip code or the city,
Yeah.
you know, and then vice versa. But
Well, and if you're flipping a property, you're going to buy it, and then you need to know what the expected days on market are going to be, so you don't start moving too fast. Now, as a buyer, knowing days on market, right? Like, that can be a huge red flag. If days on market are like 6, and you're looking at seeing a house that's been on market for 106,
right.
like, there's something probably wrong. Even, you know, even if the price looks congruent with everything else in the neighborhood,
Right.
what does that thing smell like? Did the cat pee on the carpet?
Right.
Like, I mean, you know, it's a good idea to kind of pay attention to that sort of stuff before you go in. Because again, when you're negotiating, that's something you can hit the seller with. Hey, Mr. Seller, I hear you don't want to take $5,000 less than, you know, your list price, or give me $5,000 towards closing. However, you've been on market for 150 days. I'm willing to take on your problem. If you're on market for another 150 days, it's going to cost you $10,000, not $5,000. Right. And so it'll help with your negotiations as far as, you know, you're not supposed to write a love letter. You're not supposed to tell the seller about you as a person or your family. However, we do write letters on our team that talk about the stats and explain our offer. And so when you're a buyer and you're looking at those things, you know, days on market is a huge number to pay attention to. Sometimes it's a huge red flag. Other times it's just, that's how many days it takes to sell.
So I just thought of and maybe you just answered this. I just thought of a question, like, if days on market for a specific house or specific neighborhood are like significantly higher than that area, is it generally indicative of a problem? Because
Yeah.
there are like
I mean, even if it's not a bad problem with the property. So take condos in 2024.
right.
Right?
That's what I'm thinking of, like condos, especially townhomes, like they have like an HOA.
Correct. So sometimes it's not necessarily a problem with the property. Take the first house in a neighborhood. Right? Nobody wants to buy the first house in the neighborhood. They all think it's like haunted. Or so, I mean, it's the same as every other house in the neighborhood. It's not haunted, I promise. But people think it's the first house in the neighborhood, more crime, more this, more that. Actually, the first house in the neighborhood has the least amount of crime. Because a lot of times, robbers will start in the back of the neighborhood, and they'll work their way out so that they can hit multiple houses. And by the time they get to the first house,
they're over it.
they're over it. Their car's full. They're, you know, they found a car with keys in it like mine or whatever, and they're gone, right? So, but a lot of times, if a home's days on market is substantially over someone else's or the market, there is generally a problem. Is it a bad problem? No, not necessarily. I mean, in 2024, we saw a lot of condos sitting and sitting and sitting. Well, it wasn't because anything was wrong with the condos, and it wasn't because anything was wrong with the HOA. It was, the problem was the government, right? They had changed Fannie Mae, Freddie Mac rules, and that made it more stringent on the lenders, or the lenders made their lending world more stringent because of the rule that was changed, which from January to August, you couldn't get a loan on a condo this year. Right? So nothing wrong with the property, but knowing that was coming and being on top of real estate market trends and news is important, because a lot of times what we see or what consumers see is 3 months behind. So you may be thinking, oh, I'm going to buy this condo, I'm going to flip this condo. And if you're a flipper, condos are great because they're inexpensive, right? Well, if there's not a good HOA or you can't sell it, it's not great. And you know, I talked to a lady yesterday. She owns 2 condos. She bought them in 2020 for about $35,000. They're not worth a ton more, right? They're still worth under $100,000 today. She's done some work in them. She's ready to, you know, she's ready to get them all fixed up and move them. And we were talking and we were looking, her neighborhood is not FHA approved. So her only buyer is cash, right? Like that is our option. And so when you look at days on market, it was very easy for me to explain to her how important pricing that property was, because there were two that priced way too high and sold right in the ballpark of everybody else, but their days on market were over 100. Well, what was wrong with those properties? The price, right? Like nothing, but because we're looking for cash buyers, this is an investment heavy area, no HOA rules against renting. Most people that live in this neighborhood are tenants. And so that's her buyer. That's what she's looking for. And so kind of, you know, the days on market, the problem could just be price. It doesn't necessarily mean the foundation has cracked in half or, you know, whatever. It could just be price.
And I guess to add on top of that, like there are certain areas with HOAs where they do have the rent restrictions. So I would imagine during that period of time, it's even harder.
Those weren't even selling, right? Like those, you have neighborhoods in the Atlanta market that had zero sales from January to August because the HOA was a good HOA, right? They allowed very little rents in there, and a lot of times those neighborhoods were at capacity on rent, and so those properties sat and sat and sat. I had a client buy one, he was cash buyer, just wanted a house, whatever. Had never bought a house before. Probably about 3 weeks after we were under contract, it was a cash closing, but we ended up taking the full 30 days. And so it was about a week before closing, a week and a half before closing, I get this phone call. It's like, hey, this big old guy from New York. He's like, I think it fucked up. Well, listen, we done already walked away from one problem because you decided you weren't buying this year. We ain't doing it again, dude. Like, what is going on? He goes, well, I started looking, and I'm paying $40,000 less than anything else in this neighborhood. Is this neighborhood failing? And I was like, no. And so I explained to him kind of what was going on. And the beauty of his purchase was he closed in September. Well, August is the month that they started getting things corrected. So now he called me the other day. He's like, hey, I didn't fuck up. Because there was something that closed right after him. That was a loan that actually closed a little bit over. And he's like, I got equity already. Right?
That's what's up.
Yeah, he was very excited. And so sometimes those problems aren't even indicative of what's going on with the house. It's just external influences that make things difficult, which, you know, kind of leads me into the next thing is knowing your demographics, knowing what is going on in that market. If you're looking to have a huge buyer pool and you want to get a really big return on your market, don't buy in an area where it's all renters. Right? Because if you're flipping in an area or you're buying in an area that's all renters, then that's who you're going to be marketing to. So you're going to be selling to somebody who's probably a cash buyer because they're going to be investors and they want the best price. They don't care about granite countertops because they're going to get the same amount of rent, whether it's granite countertops or not. I mean, they might get a little bit more, but tenants don't pay in a high rental area for extras in things that are nice. They want the best price. So they don't necessarily want the granite countertops or whatever.
And I feel like most homeowners that are like in the market for a home really pay attention to like who's in the neighborhood.
Correct.
Maybe not first time homeowners, but like,
well, they got to buy where they can buy anyway.
Of course. But like ones that have bought a house, like this is their second one, or maybe they're looking for their dream home. It's like, oh, do I really want to live here? And it's got like all these renters. Don't nobody care about their damn house. Correct.
And a lot of times what I'm finding right now, like my girl that I talked to yesterday, she's not a first time home buyer. She's got these two little, they're townhouses. It's in a quad, but she owns the two in the center or whatever. And she bought it with the hope to make some money. Her son's living in one, so now she's kind of doubling price with what the updates that she's done and all the things. So we're going to sell one, and then she wants to buy. And so we were talking kind of what her options were, and that was one of her stipulations. She's like, she wants to move to South Georgia. She's in South Georgia, I think. But she's going to go with my girlfriend Beth as far as her buyer's agent after we get her condo sold. And one of her things was, I don't want to live in an area that is saturated with renters because I want to live in an area where the front yards are cleaned up and the neighbors don't turn over all the time and all of the things. And she was more flexible on her must-haves inside the house because she can change that. She understands that she can't change the neighborhood and the location. So understanding who is living in that neighborhood is important, right? Is it, you're buying a 1-bedroom house to flip, or are you buying a 1-bedroom house as your first home? Well, who's going to buy that when you turn around to sell it? What is that buyer pool going to look like? So understanding when you buy something, whether it's a rental, whether it's a flip, whether it's something you're going to move into, always understand the demographics in that area and where that area is changing to, right? As schools get better, well, now all of a sudden you're going to be marketing to families. If you've got a 2-bedroom with no office space, but that going to be hard to fit Kinseo. Right? Because mom doesn't want her kid in the office to be in the same room. And so understanding, kind of what comes after you in that property is important.
Right. Exactly. Do you know what time it is?
I think so.
It's time for question quickies. So will the real estate market crash in 2025?
Since I don't have a crystal ball to tell me that, I actually don't think so. So I was talking to one of my financial advisors yesterday, actually, about this. We were having this conversation, and she was saying that they just reduced the number of interest rate fluctuations that they're going to do next year. I think they were looking at 4. It sounds like they're now looking for 2 to kind of hit the market. So I don't have a crystal ball. Here's what I do know. I do know that 9 out of the last 11 elections, we have seen the president-elect drop interest rates late in Q1, beginning of Q2. I do know that historic trends have shown the real estate market to do exactly what it did this year prior to the election. Kind of comes to a halt, right? Everybody thinks, oh my God, the world's going to implode because some news going to be the fucking president. Well, no, it's not. Like, it's not. Like, I don't care if you hate them. I don't care if you love them. It is not. Right? Like, we are all going to get up. We are all going to continue to survive. We've had presidents before, but everybody tends to think that the world is going to come to a complete stop. And so that interest rate drop is something that the president-elect can do to kind of make that market tick along again, okay? So that's historic data. I do think we are going to see a pretty decent little spring run. Another fact that is real, that is not in my crystal ball, is there are 7 million buyers waiting in the wings right now to purchase. And so at some point, 5.5%, 6.5%, 7% interest rates are going to feel normal again. Right? At some point, we are going to be far enough away from the 2020 interest rates that were under 4%. And there'll be enough of us who need to buy again, right? Most people need to buy every 7 years. And so we are 4 years out of that low interest rate bucket that we were in. And I do think this will be the summer and the spring that a lot of those buyers start saying, fuck it, because they've been waiting and watching and waiting and watching, going, I'm waiting for the crash and I'm waiting for prices to go down. They're not. Like, they're not. And if you see markets, maybe you see prices go down in Decatur. Maybe you see prices go down in the condo market because something external is happening. But to look at what's coming in 2024 or 2025, it does not look like a crash. It actually looks like a strong seller's market early on in the year, and then it's really going to depend on what the government does to the interest rates. I think inflation is still a little bit out of control. I think people are still struggling a little bit. I do think that if you're looking for some real estate pops and some drops in the market, I don't think 2025 is your year. I actually think probably 26 is going to be more your year, because
or fall and winter.
It could.
2025.
It could be. I push it out to see more foreclosures in 2026 because we saw a very heavy buyer market that were using 2-1 buy downs in 22 and 23. And most people are going to enjoy the 2-1 buy down for the first 2 years, have that lower mortgage payment. They're going to struggle through year 3 and year 4. But after 12 months, 24 months of paying that higher mortgage rate, if they don't refi, I think you're going to see some of those buyers get in a little bit of trouble. So be on the lookout for that. But as far as a crash, I just don't, the lenders aren't lending so haphazardly and so irresponsibly that we will ever see a crash, like not in our lifetime, like we saw in '08. Will you see markets correct? Absolutely. Will you see markets that come down some? Sure. But again, it's not going to be a crash. It's going to be factors that play into that market. We have too many buyers waiting to buy. And we are starting to see a lot more multifamily lifestyles come into play, which I think is actually going to kick our buyers market into a little bit of overdrive. People, first-time home buyers, are finally sticking their tail between their legs and conceding. You're seeing friends buy houses together now. You're seeing siblings buy houses together now. I'm talking.
My family is actually currently looking for a multi-generational home.
Correct.
Like a home large enough to where like my grandmother can stay with an aunt, or
Correct. So I think as a society, right, we in the 1800s, we took care of each other. And then in the 1900s, like, fuck y'all, we don't like each other no more. You stay on that side of the fence, I'm going to stay on this side of the fence, and we're going to be separated. But I think, history repeats itself, right? So this is going to be kind of that ebb and flow through time, I guess. But now people are realizing, hey, as a family member, there's some value in that. Let's learn to get back along. Let's learn to take care of each other again. And so I do think you've got some states where multi-generational living is a thing. Like there is a like house and there is a
already,
correct. And so I think you're going to start seeing some more of that. But definitely keep your eyes open. There will be some really good real estate opportunities. And then there's going to be some people who make a killing on real estate as far as the seller goes as well.
And it might be smart to keep up with that trend from an investor standpoint too. Like whenever you go to the properties.
Well, correct. Like I love to watch the Decatur market because I may not be flipping in Decatur because everything's flipped. But boy, let me find some seller who's been sitting on the market too long. And then all of a sudden obtaining that 1% in rent becomes a reality. Because you're going to be able to knock them down on price point a little bit, and then your tenant's going to move into a totally rehabbed house because somebody else has taken on the the renovation. And so I think that knowing your trends, watching the market, and staying current. Don't get data that's 3 months behind. Don't listen to CNN. Don't listen to Fox News. Don't listen to those guys. They're 3 months behind. They're not telling you the truth. Like, please, I'm begging you. And you can do the research yourself. It's not hard to pull the data. It's just pulling it and understanding it and then knowing what you're looking at.
I feel like this is really good, like, segue into the second question.
Okay.
Because the question is, will real estate agents be replaced by AI? Well, what you just said is a factor as to why they wouldn't be replaced by AI.
So I think that's a two-part question.
Of course.
Okay. So do I think real estate agents are going to be replaced by AI? I don't. I don't. What I think is being replaced is the modern day brokerage where you hire a solo agent. We in the real estate industry are moving towards a cloud-based brokerage. EXP, in my opinion, is leading the way in that. I think they're doing
smart with that.
They were. They got into the cloud-based brokerage, 15 years ago, which was great. You've got a lot of these new. You've got Real. You've got Epic. Great companies. I've looked at all of them. I've considered moving my license to all of them, and I will never say that I am married to a broker ever again. I said that about my first broker, and I won't say that. But what I do see happening is these cloud-based brokerages allow us as a realtor to provide a substantially better experience for our clients because of the tools and the training and just the way that our stuff is handed down to us from our brokerage. When I was with KW, I only knew what the 300 people in that brick and mortar knew. Right? Like that was it. It was a very small square. At EXP, anytime I'm in any kind of training, there can be 87,000 of us on that training. Right? And so when there's one topic, we get to learn a whole bunch of things about that topic and a whole bunch of different perspectives. What I see coming is smart agents will automate a large portion of their business.
Right.
So you don't want to work with a company that's so automated there's no human interaction, because the computer is never going to be able to do and price and look at the things the way a person can, because they're not subjective. Right? There's no emotion behind that computer. There's no logic behind that computer. It's just very black and white. It's data, it's numbers, and it can spit it out. It's great. So I think what we're moving to is an environment where the agent has a ton of things that are automated, right? When you work with me, you're not going to miss a step on your contract because your contract's automated.
Right.
I don't want you to miss anything. I don't want you to miss getting the utility sheet, right? As a buyer, if I don't give you the utilities, you can probably Google it. But as a buyer, it's a lot easier that my staff goes and gets that for you from the seller, right? As a buyer, it's nice that we send you out an email in January that says, hey, you bought a house last year, you better file for homestead.
Right.
Like, there's a tax break. Let's get it. Right? As a seller, it's important that we do all of the things that are important to get your house ready. And again, we have a step-by-step process. There's a ton of paperwork that you have to fill out. There's a ton of things that you have to do. Because if you get a buyer, I don't want to be like, hey, can you fill out your seller's disclosure today? Like, that needs to be done. A buyer needs to see those kind of things. So I think it's a matter of, we're going to see more teams, right? To where people are more focused on their job in your transaction. So my team, we have multiple agents, right? Anytime you work with me, you get two of us. Right? There's going to be two agents. There's going to be a buyer's agent who's going to help you show if you're listing. There's going to be an agent who's going to potentially be helping me on the back end with your listing. You're going to get my back office team. You're going to get all the things. And I think that is where real estate is heading, are these teams that function almost like a brokerage, right? These, big teams or whatever. But as far as totally replacing us, I don't think so. But I think it's going to be more of a business structure in a real estate office than what you've seen in the past. I don't think they need as many of us.
Right. Well, there was a bunch during, when the market started going crazy?
Well, sure, because it seems like easy money to make.
It's like, I'm a real estate agent.
Duh, because it's easy.
Last question here is, are real estate taxes deductible? So they are. If it's on your personal return, though, you have either the option to itemize, in which case your real estate taxes become deductible.
So let me ask a question. Since you're talking about personal and having to itemize if they're personal or not, should they always have their real estate in a business to just avoid having to itemize?
Yeah, so if it's not your personal residence, then yes. So then at that point, you don't really have to worry about it. You just deduct it on your business return or Schedule C or Schedule E. But if it's your personal residence, so let's say you pay $10,000 in taxes, but that's all that you paid. Well, your standard deduction is going to be more than that. So it wouldn't make sense to itemize. So they are deductible. It just is, do you have enough to itemize, or are you going to take your standard deduction? So
I have heard part of what you pay on your payment is deductible. The interest?
The interest is also deductible, but that's also another itemized piece. So if you don't have enough and it's under your standard deduction, then at that point it just makes sense to take your standard deduction.
Over that one, because you get more with the standard.
Correct.
So it's a matter of collecting data. My favorite game.
Yeah. Absolutely. Absolutely.
Now, I have a question. Sorry, I'm throwing in more questions because you know me and my tax strategy planning that I'm doing right now. So as a homeowner, one of my clients used to do this. Every home he owned was a business, was in his business, even his personal home, and he was a tenant. What does that look like on your taxes? So he rented from himself. He paid, he legitimately wrote a check every month and paid himself rent.
Well, then at that point, you would just deduct your taxes and your interest.
Is that something people should do? Is that a good strategy?
Well, in that case, it sounds like he has multiple properties and it makes sense to do that. I don't know that I would recommend it for everyone.
Got it.
right? So, like for instance, if you're just doing that with your primary residence and that's the only property you have, it may not make sense.
Got it.
Yeah, but if you've got like 3 or 4 properties, then at that point, it may make sense.
What about buying a duplex and living in one half? What does that do for your taxes? Is like
You know-
half the business, half personal?
You know, I was thinking about that because I want to purchase one for myself, and I
Right.
was thinking, do I put half into the business or do I put the whole thing into the business, and then rent it for myself? At that standpoint, honestly, I might put it in a trust because
Fair enough.
then at that point I can rent from the trust for my personal usage. For my personal usage, but then also have the other side, and they're paying rents on that. So then
Right.
everything from that standpoint becomes trust business, and then you can deduct everything. But doing it on a business return, I don't know. I mean, it might make sense, but at that point, it kind of depends on the structure of the business. Are you doing a corporation? Are you doing an S corp? In which case it may not make sense. Or are you doing a partnership? And if you're doing a partnership, then it may show up as passive on your personal return, and it may not give you as much benefit as you want.
That's good. All my questions are answered now.
Sweet.
I'll call you tomorrow with more.
Awesome. Well, thanks for joining us today on Spill the Tea with Laura and Dee. And as always, if you thought this was helpful or entertaining, hit the heart or send to a friend. Also, if you have any questions for a house flipper or a real estate professional, drop us a note below and we'll answer them in an upcoming video.
Yes, we will.
This is light work. Come on, spill the tea. Yeah. Ooh.